Hi, Umar. How are you today?
Good. Hey, Melody. How are you?
Hey, very, very good. Nice to see you again. Um, this time, not in person, but we're in different, the opposite side of the world. Yeah, very excited today to have this conversation with Omar. We've known each other for a long time. Spartan has invested in Chaos a couple of years ago and have seen and witnessed the growth and also change at Chaos. So I'm very excited to go to take a deep dive with Omar. Um, First of all, I do want to kind of take a step back and look at the entire overall things that Chaos is building. So when I come to the website, right, I see three products. There's Chaos AI, there is Edge, there is Chaos Analytics, and they sound all very different. So I want to address this first because I hear that a lot. What exactly is Chaos? Like, are you an AI company or are you an Oracle company? How do we think about, you have such different products under one roof, and what does that mean for you?
Yeah, for sure. So I think it's actually like a good volley for what Chaos Labs is and but what are the different kind of technology that we built and products today that actually under the hood power um the vast majority of leading protocols. So I think what Chaos Labs has always been known for is our risk platform.
Yeah.
We have a financial risk platform that powers applications like Aave and Jupiter and GMX and dYdX and EtherFi and Renzo and Layer Zero and a long list of customers and partners that we're kind of very proud of. And when we think about financial risk and the kind of the parameters that fall under this bucket, it's really the underlying parameterization for all of these protocols. So if we take Aave as an example, as a lending protocol, and you think of all of the components that are core to Aave, you think about what are the assets that can be listed. Can they be listed as cross margin or an isolated asset? If an asset is listed, what's the loan to value ratio? What's the liquidation threshold? What are the interest rates on this type of asset? All of these parameters in Aave, as an example, are streamed in real time by our AI-powered financial risk engine and put on chain. So that's like kind of the first thing. When you interact with your favorite applications, be it Aave, EtherFi, Renzo, Jupiter, GMX, trading, loans, stablecoins, in the end, the pricing of that asset, of that trade, of that position has been likely priced by Chaos Labs. So for everybody listening today, if you've done anything on chain with those protocols, under the hood, you've interacted with kind of the Chaos Labs product set. So it really started with this financial off-chain engine, which was like the brain for a lot of
Yeah.
these DeFi protocols. But we wanted to take it a step further, and that's where the oracles came into play. For the first few years in the industry and when we started the company, all of kind of risk management and kind of smart contract adjustments were done very, very manually. So this meant that every time that a new asset wanted to be listed, or we wanted to increase or modify the leverage settings or interest rate
Mm.
settings, an engineer had to actually sit on the other side and manually create a Solidity payload and deploy it on chain. This is incredibly prone to error. It's very slow, and
Right.
effectively, it meant that at the time, every single application was static in nature. So, in order
Mm.
to enact a change, if there was a black swan event, if there was a heightened volatility, you needed a human to sit on the other side and deploy some Solidity code.
When you when you
This
when you
is
say that human on the other side, what do you mean? Is it typically the protocols themselves have somebody sitting on the other side and they constantly tweak this? So somebody from the core engineering team always have to because they cannot rely. There's no one third party can provide this. So they all of them
yeah.
has to do
So
their own way, right?
it's exactly that. Like no third party can do it. And so imagine that like all of the protocols that I mentioned before had like a team of engineers who were on call 24/7. And they would get an alert from like notification from the Chaos Labs risk engine that said, hey, the market has shifted and we need to make these updates. And then they would have to go write pull requests, get it reviewed, maybe get it audited, basically extremely kind of tedious multi-step process just for simple changes. They're simple changes, but ultimately like they have massive impact on the risk exposure of the
Mm, yeah.
protocol.
Yeah.
Um, so there were basically, Aave in itself was doing thousands of these updates a year. But Jupiter, GMX, EtherFi, Renzo, Athena, all these teams were doing many as well. So obviously this didn't scale, and this needed to be real time. Like when you think of risk, when you think of security, you think of the ability to process information real time and adapt to the market. And that's when we decided to actually build the Chaos Oracles, which today are live. The Chaos Oracles have three subcomponents. They're basically price oracles. So I think today this is the most, I guess, popular type of
Yeah.
oracle when people think
Yeah.
of the category. But there are risk oracles, which are the oracles which stream the strictly financial parameters
Yeah.
to the application. And there's
Yeah.
proof of reserves.
Yeah, so
Um,
let's go back to the price oracle. You said, yeah, this is
yeah.
also what most people understand oracles by, right? Because I think the first one we heard is probably Chainlink, and then you had Pith,
Mhm.
and you had Redstone. So are these only price oracles? That it's only part of what um, Chaos provides? Is that what you mean?
Yeah, so I mean, I think basically like we look at the space like fundamentally different when it comes to
Mm,
oracles, and I think the price oracle is comparable to kind of the other protocols that you mentioned. The
mm,
risk and proof of reserves are not. We're the only
yeah,
ones, for example, who provide the risk oracles. But our approach on price is different, and it's also pretty relevant in our eyes, like there should be no such thing as discussing price without factoring in and considering risk, right? So like
mm,
when you're looking at the price of an asset, you also want to understand like what is the depth of liquidity for said asset? What would the price impact be on specific kind of transactions. And these are really important from a protocol perspective on the security and the robustness of the protocol and therefore the users. And I'll give kind of a few examples. Let's imagine, and this is actually not a theoretical example because it happened last week and something the industry was talking about. Let's say you're providing a feed for a price feed for a stablecoin, right? And the stable coin should be, as the name suggests, stable,
yeah,
because and the usage of that feed is actually dependent on that, right? So typically, when people a popular trade that people do is they loop stables on lending applications in order to kind of juice yield, with the belief that unless there is some black swan or catastrophic event, the price should be stable because in most cases, a lot of these assets are fully backed by tokenized funds or something sitting off chain.
yeah,
However, a lot of teams will price the stables based on their secondary market liquidity. So, say the price of the stablecoin in real time, as shown in a Uniswap pool, right?
hmm,
Um, Now, this pool might have very thin liquidity, and a relatively big trade could move the price on a single block
yeah,
um, for a few seconds. Now, this price or this spike in price, especially if it's only been there for a few seconds on a single pool out of many, um, should not, move and liquidate all of the users who are looping with the stablecoin, right? Like
yeah,
this is just like a temporary market dislocation, which reflects an arbitrage that is kind of going to happen. And
mm,
fundamentally, you also should have the understanding and instrumentation to know that the coin is backed, right? It's redeemable, and this is
yeah,
just like an organic market movement. So 2 weeks ago, to in a Chainlink feed, in fact, this happened on Avalanche, and over $500,000 were lost by users in the Euler protocol as a result of this. So this is an example, right? Like if you have the full context of
mm,
the market, the oracle, the manner in which it's going to be used, certainly if you would have asked the founders of the Euler protocol or the curators or the
right,
users, like, is your expectation to be looped if like the price moves 3%
mm,
because of in a single block before it reverts to what it was? The answer is no. like the asset is fundamentally backed. Um, and we'd want kind of different, maybe more strict conditions for showing this. Maybe it actually needs to happen on more than one pool, not a single pool for an extended period
Mm,
of time. And this is the stuff that you can't do when you're simply a pipe. So
yeah.
most of the protocols are in the what I call the V0 of price oracles. They're like great infrastructure providers. And kind of the way they think about it is like, we're going to connect to these various data sources and APIs,
Yeah.
and we're going to spit out exactly like what those APIs
Mm,
say, maybe take a
interesting.
median.
Yeah.
But we're unopinionated on the data. Like that's not
Yeah.
our domain expertise, where we don't understand the risks, we don't understand the markets. We're just a reliable relay. And for
Really
us,
on
we're
the,
saying
yeah.
you're securing hundreds of billions in volume, and the use cases for these oracles, they're nearly completely financial. And you need to understand the data that you're using. You need the ability to put some type of business logic into these oracles that ensure that they're working in the way that they are intended to work, and that any price dislocation or deviation from what is expected is indeed backed by conditions which necessitate it. So that's the long
Yeah.
and short of it. We care about the actual data. We have a risk engine and AI workflows that sit on top of our price oracles. So while it's comparable, the approach is simply different fundamentally.
Mm, yeah.
Um, and we think that you need to look at all of these things holistically.
Yeah, that's very helpful. I think adding the business logic part to a simple, so it's not no price is equal. Adding the business logic, right, to how you interpret the data, which triggers very impactful financial decisions. That's what you're saying is really differentiates Chaos Oracle from others more simple, simplistic price Oracle. So in terms, so just I actually want to ask you, like, so what is the size? Like, what is the so you said there were, what was the financial impact for that example? Was it in the tens of millions or do you remember?
Yeah. I mean, on the example that I gave of last week, or I think like 8 days ago now, of that single mishap with over 500,000 that was lost
Yeah.
in 2 minutes.
Wow. Okay.
But over the years, I mean, it's certainly hundreds of millions. Like I think a lot of attacks fall into Oracle attacks and market manipulation, or oracles that can be pretty easily kind of moved in favor of an
Mm,
attacker. So, I mean, a classic example is the Mango Markets attack, where the exploiter on Solana um, put Mango, which was a governance token at the time on the Solana network, as collateral, had only, I think, like 30K market liquidity, spent 50K or 100K to pump the price like 300%, borrowed hundreds of million to over $200 million in Bitcoin and Ethereum against his unrealized P&L, and then defaulted on his position, uh, effectively bankrupting the protocol. So like
right.
that is like an example, and there are a few others examples. I think more and more the industry is coming around to understanding that this is like a critical vector that could destroy your application. So we're seeing more awareness, but at the same time, I still think it's like one of the most prevalent attack vectors that we see being exploited in one way or another over time.
It's quite scary. I think on-chain finance or DeFi, on one hand, is very open. Anyone can build it. They can easily fork a smart contract on Solidity, launch it on a new EVM chain. And these engineers might not have the financial experiences, right? The risk experiences from not even say TradFi because they I mean that's important, but even for some of the more simple things, it's like you think it's simple, but lending markets could be extremely vulnerable, and the exploits can come from different places, right? Even some of the most experienced builders, even Hyperliquid was exploited because different people take. There are hackers trying to, well, not hackers, but exploits, right? Trying to manipulate the smart contract and how you design the logic. If you don't know or anticipate all of that changes, the loss could be in the millions or even not more. Yeah, so I think this is a lot of people don't realize. I think the risk is probably the most important piece of information to get right in financial products. Without and truly understanding risk, there's no way you know how to price. any financial instruments. So which is also why like when we first learned about what you guys are building, we're very excited about someone who actually addressing the risk assessment problem for all of DeFi. Um, yeah, that's really helpful. So let's move forward a little bit. So that's you started with a bit more manual, right? Risk consulting kind of an assessment, and then you move on to a bit more scalable, like decentralized Oracle, but more generalized kind of use cases. Um, and then why are these important? Like, why is that something you can now say, okay, now I'm building AI? Like, that's a pretty big jump, but how did you get from one to the other?
Yeah. Yeah, I mean it's so maybe like it could seem that way on the surface, but like fundamentally like the like if you go back to the core of what we do, which is calculating these financial parameters in real time across 20, 30 plus blockchain networks across different types of financial instruments like lending, derivatives, perps, stablecoins, options, spot. Um, the only way to do that is by kind of building these statistical machine learning driven models. And that's been at the core of our technology for the past 4 years. So um, we built an agent-based Monte Carlo engine, agent-based before agents were in fashion. Um, and prior to the existence of LLMs, the engine primarily took into consideration quantitative signals. Um, and it worked. It worked enough to secure the biggest protocols in the world. But ultimately, when GPT-3 came out, we realized that this was a potentially huge unlock that would now allow us to extract signal from unstructured data, starting
Mhm.
with text, and use that to drive a lot of the recommendations as well. So basically being able to take in more high quality signals, cover a larger set of parameters, and also increase the quality while reducing kind of the latency here.
Mm.
And that's what we built. We kind of expanded the capabilities of our engine that had already processed and was responsible for securing several trillion in volume across loans, liquidations, volumes, direct trading with the price oracle and more. And that was pretty great for us. And what was also very interesting about this technology, and this is just the nature of language models, was that we had an opportunity to build something pretty unique, which is Chaos AI, because of the business we had built before. So, in order to do the risk, we had built out a proprietary data lake with very clear data and signals from all of the leading blockchains, centralized exchanges, more traditional markets, as well as a layer that connected them semantically so we could understand the relationship between all of them. So we had kind of this data advantage and understood that kind of models today, the general ones, were not trained on this type of blockchain, order book, just general kind of trading data. But we also had, I'm potentially biased here, but one of the best research teams in the world that could teach the models how to think given that data, which is the other area which is incredibly important. So with this together, we realized that we could build a product that addressed a broader market, and that's how Chaos AI was born about over a year ago.
Yeah, I think the LM and the GPT moment was profound for all of us. And
Mhm.
it's, I think, definitely one of the most exciting or most ambitious um, vertical or industry to solve is finance, right? I think crypto ultimately started to try to solve the problem of money, and most of the products in blockchain which have found product market fit is around solving finance and making it more efficient, more transparent, and also more accessible. So, like, what does that mean? Like when we built this? So you're saying we have now collected more data and we have better research teams to train this model. What do you think are the hardest part? First of all, like what are the hardest part to build? And is the on-chain finance different from Web2 finance? Because I'm sure the interesting thing we're seeing is right now, most of the applications are still purely on chain, right? All the assets being used and traded are purely on chain. Massive
Mhm.
amount of RWA are coming. Well, if we think about stable coins, that's probably all backed by treasury. But there's a lot of efforts, right, in putting tokenized money markets, tokenized everything, stocks, everything on chain. So that's not here yet, but we know billions of dollars are being deployed, right, to bring all of that on chain. So when you're like building, I'm sure your ambition, I hope, is not just, only crypto assets, it's expanding into, right, traditional assets. Is it, do you see a benefit of all of them on chain? And is this where the most efficient way to build this product, or do you think these two are quite different and you will, I guess, you secure yourself on chain and but all of the other TradFi financial models and how they trade is very different? Like, how different are these two, like building for these two worlds, I guess?
Yeah, it's a good question. So I think on the surface it might seem like they're like very different. I think in practice and in reality they're not too different. But I think that like in order to reach that conclusion, yeah, you need to have a system that's built kind of with the right abstractions and kind of right layers. Um, so at the end of the day, when you're building a system that is built on um, heavy pipelines, ETL, data normalization. Ultimately, with various transformations, and of course, it's not one to one, but the data ends up reaching a structure which is quite unified, and allows you kind of look at the data in ways that kind of make a ton of sense. So. Yeah, I mean, at the end, it's financial instruments. They're, for the most part, kind of like rational trades. There are differences, for example, like spot exchanges and CeFi that run on order books, and we have AMMs. But um, once you kind of pull the data up and clean it, you can kind of look at them pretty similarly. And a lot of the principles remain the same, right? So, like at the end, and everything we're doing in on-chain finance is we're trying to build like a better financial world, but ultimately like the instruments and the service that we're trying to provide, the ability to swap, the ability to lend, the ability to borrow, the ability to transact is very similar to what we have in traditional finance. So it's all in the same domain, definitely. And then also like whether or not you want to look at everything, you don't really have a choice if you're doing this seriously, because as you said, I think the number now is around 10 to 15% of global crypto market cap is in fact tokenized assets. So you can't live in a world where you're only looking at the Bitcoins and the Ethereums of the world and you're not thinking hard about like, what are these stable coins backed by? What are these tokenized money markets backed by? So an AI that or what we're calling AFI, artificial financial intelligence, which is truly state of the art, can really reason and think about both as first class citizens and not only think about them individually, but also understand the relationships between them.
Yeah, yeah, yeah. I think that's kind of the ultimate vision that we're all kind of coming from, right? Crypto rails replacing the legacy and archaic financial rails and improve the efficiency, right? And then you apply AI on top of that, even bring more, um, I guess, interesting applications or faster executions or more intelligent decisions. Um, So I mean, the AFI or the DeFi, or actually DEFAI, right, has been something like, I think that if you are deep in crypto, you hear a lot about people are trying to build, and yet today we haven't seen that many successful projects. Um, do you do you know why? Like, do you feel like, oh, I know the reason? Is it just because it's too complicated, or is it because LLM is not really good for building or being used in financial applications? Like, what is the reason why some of these finance related agents haven't done that much impact or hasn't been as successful as people want? Compared to the social agents, right? The Twitter agents. that's like first came in, that was really hot, and it just sounds like a human, that's really funny and it's really productive, but the financial agents really haven't really broken out in our industry.
Yeah, I mean, I would say that look, at the end, like the language models are great. It's a technology which I think more than anything I've ever seen before, demo is really great. So it's like very easy to build like a quick demo which communicates or conveys like a point of what you can do about it. At the same time, there's a massive gap between a prompt that looks useful to a product which is battle tested, hardened, and ready for production and uh, able to secure kind of billions of dollars in flow. And I think that's what most of the builders have discovered. They're actually discovering that AI is great, but it doesn't allow you to skip the hard parts of building a great product. You need to have an incredible attention to detail, like incredible attention to craft. Still need to do all of those things in many cases, plus now mastering like a new technology, which isn't necessarily well understood globally. So it presents a challenge, and it's one that I think. Uh, is definitely going like there will be teams and certainly we're working on it that are able to meet the challenge
Yeah,
and put something together that's great, but it takes time.
yeah.
And yeah, so I think we are going to see, by the way, I don't think this is like specific to crypto. Like if you really kind of like look
Mm, that's true.
at
Yeah,
what are the breakout apps that we've seen globally in the world of AI. So yes, you have like the cursors and primarily developer tools, which have emerged as like a good use case with good products, but there's really not a lot besides that right yet, besides like the toy use cases of generating like funny images and memes and helping you with your emails. So I think it's clear to everyone that like this will allow for developers to create game-changing technologies and experiences, but we haven't seen it yet. And it's going to take a little bit more time outside of developer tools. And I think it's going to be a similar kind of trajectory and timeline for the world of finance and specifically crypto as well. The bar here is
great.
also higher. Like you're touching value. So you're
Yeah.
not rewriting emails, you're not making up jokes, it's not entertainment. It has to be right. Um, so we'll get there. I'm confident that we're going to get there. And that what we're seeing internally with our research team and with our
Yeah.
AI stuff is makes us have very high conviction. Um,
Mm.
so
And and then in terms of your approach, right? Because I've seen, I mean, after I guess there has been, AI or people in crypto have been trying to use AI to build trading agents, for probably the past 12 months. I've seen, different projects come and trying to solve it. What I'm seeing right now is that application or that use case are becoming more and more specific. Because before people are like, oh, I want general trading agents. I prompt, I want to trade this, and the agents will go ahead and find a strategy and execute it, right? And in the chat sort of interface, kind of like the early stage of Griffin, right? Some of these like a wrapper. But then, that didn't really take off. You didn't really see people use it for what we initially thought people would use it for. And now what I'm seeing is they're either more like machine learning kind of AI agents, right? To do specific strategies, they're looping or they're optimizing yield, or some of them are analyzing liquidities. And so I am seeing that teams are being more specialized in what they think AI can be effective. I think it's probably the right way to approach it because each application is so different. You're using AI to enhance either the workflow or trying to understand the context better. How do you, how are you guys seeing it? Like, are you like under, I want to go under the hood a little bit more on you thinking about AI, right? Because are you thinking about a much more general way of designing your intelligence, or is it you think it will be many, many like refined or fine-tuned small models on top of a general model that solves specific problems? But then even if use one prompt and it might pull like maybe not hundreds, but maybe five different mini models to kind of accomplish one task.
Yeah, I think that um so I think internally we're not really speaking so much about like models anymore. It's more of like AI systems. Um and ultimately like when you look at like a use case like trading or more generally like finance or some of the other industries like medical or accounting, it's a really big surface area. So I don't think that you're going to have like one massive model that does everything. You're going to have a system which is built from several different components that is just working together. I'll give like one trivial example, like fetching and streaming real-time financial data from hundreds of data sources across hundreds of markets, consolidating, normalizing, doing all of those things, super important. The end result should be fed into the model to give it the correct context, but it's not part of the underlying model itself, right? So the approach that we've taken is we're building an AI system. Today we're using about 15 or 16 different models. Also, these models are trained and perform differently across different
Mm,
tasks. So you have like one
mm,
model which may be very fast and cheap um, at extracting a user intent. So giving a query,
mm.
reformulating it in a way that is easier for the model to understand and extracting that single intent. You might have another model which is good at writing responses. So like given
Yeah,
all of the information and research that you've done, this model can like write in a way that's very kind of easy to understand and clear. Those are two examples, but there are like literally hundreds of other examples. You might have other models that are kind of better at dealing with math, because kind of models are notorious for being pretty bad at them.
yeah,
So it's a system approach, and you try to choose like the best tool for the best task. At the same time, um, like you're also kind of fine tuning different smaller models, but a user is interacting with a consortium of models versus a single one in our product.
yeah, makes sense. And when we talk about like people say, I think when AI first came out and crypto media, like, oh, there's a lot of problems, right, in the current AI technical stack, right? Very centralized, owned by a few big companies. The more proprietary data you have, or more proprietary research you have, the more you're going to own. What do you think about that kind of opinion, right? Because if I go to there is definitely a change, right, from like 12 months ago when I started hearing about people talk about decentralized AI. It's really about that. It's like, how do we decentralize compute? How do we decentralize AI models? How do we decentralize inference? How do we decentralize data ownership? Um, what's your thinking, like as somebody who's building one of the most critical applications using AI? Are these something that you think user cares about? Do you think this will need to eventually be, kind of like, we started with centralized money, we're moving to decentralized money creation, right? Bitcoin. Do you think this will happen kind of once we figure out some of the applications before like, oh, the applications are figured out, let's then figure out how do we further decentralize stack? Um, or do you think, because right now a lot of people don't care, right? Most people in Web2, well, most people in the world don't care about decentralized AI. What's your view
Yeah,
about building both application as well as being so deep in crypto and seeing and being steeped right in this kind of ethos? Like, where are you in decentralized? And what did that mean to you?
yeah. So I mean, I think for me, and the company are extremely product driven. I think we always have been, and like we always think of it in the lens of like what is the value that the consumer, the protocol, the partner is getting at the end of the day. Um, so I mean, bluntly put, like, it's not something that I spend a lot of time thinking about, like today, like decentralizing training and inference at the same time. And we know this from the financial use case, like it's all fun and games and it's not important until it really is. And when it
Yeah,
is important, then you really wish you had alternatives. So we're not focused on decentralized training right now, but I do think there's value in it. Um, And I think that over the past year, we're learning that uh, smaller teams that are very capable can compete across specific use cases with some of the larger foundational models. So I think it's also like plausible to a certain extent. Um, does the user um, does the user care? Like I think if the trade-off is waiting like 3 minutes for a response or waiting three
Mm.
seconds, they'll pick 3 seconds like every
Yeah.
time.
Yeah.
Um, So it's something that we're thinking about. We're starting to look into it, looking at the different subnets on BitTensor and some of the other
Yeah.
solutions there to see
Mm.
whether we can get, like extra compute at reasonable prices
Yeah.
under good SLAs. But I think it's something that we're going to spend a lot more time on once kind of V0 and V1 are
Mm.
in market. And now we're in a stage of, okay, let's actually spend more time thinking about optimization, decentralization, and a few other things. And I also don't think, by the way, that this is like, I think that's pretty common today in the market, right? Like, say what you will about Hyperliquid, for example, but they are not the most decentralized
No, they're
perp
not.
DEX ever.
Yeah.
Maybe they will become over time, but I think as just like a builder, you first want to care about product market fit and not like religious like dogmas. And once you have that, then you can kind of progressively decentralize and move towards that. So yeah, that's how we're
Yeah.
thinking about it. First, let's build a great product with really high craft. Then let's start seeing what the most interesting, highest leverage areas are to kind of decentralizing it and giving it to the people.
Yeah. No, I really like this approach. I deeply agree with a lot of the things you've said. I've been in the industry since 2017, and so many early decentralized projects, especially that's application driven projects, just they lose the momentum and the execution excellence, right? Once they start to decentralize too early, before they find, not even before they find product market fit, and before they define their leadership, right? Before they become the number one, number two in the category, early decentralization just means you're losing a lot of momentum. You're losing a lot of, you are losing attention and focus. And that resulted in, before you know it, you're outcompeted, right? By somewhere like a competitor, you don't even know where they came from. I think people can easily say like Hyperliquid now is a bigger or a higher FDV L1 than many of the other L1s. And it started with one application, right? So even you look at your things that Hyperliquid is centralized, even Sui is centralized, right? And they had an exploit and they wrote back the blocks and they invalidated the exploit transaction. And if
Yeah.
I'm a Sui investor, is that what I like, or do I want somebody to steal $200 million in Sui and start dumping the Sui on the market? So most people still prefer, right, actually a centralized team being responsible for this. And me as an investor actually feel more comfortable, right, with a centralized
Yeah.
team who's responsible for this.
Yeah, and just like also like I agree with everything you said. It's just like important to keep in mind that decentralization is a spectrum. It's not like a binary switch.
Yeah.
And like already having everything on the blockchain, being more transparent, that is already leagues and above, what we get in TradFi, and you can always make that better. But at the end, what comes first is building a great product. It'll happen over time, I think, in due
Yeah.
course.
I agree. So, I mean, we don't have that much time left. So, moving, I guess, looking forward a little bit, would be the first product that when I guess we can try it out, Chaos AI, and what do you think are the best, like, because we talked about different applications, right, using Chaos AI. What do you think is the most exciting feature? We'll get, better results as a user of Chaos AI.
So yeah, I mean, like as a company right now, we have like two core focuses. It's the oracles and everything that goes into that. So price, risk, and proof of reserves, and the AI, um, or basically our ability to kind of reason about data in a way that is more intelligent. Um, Obviously, the oracles are better because of the risk and AI engine, but then we also have the standalone AI product. On the oracle side, um, we have some pretty incredible partnerships that are going to be announced over the next few weeks. And I think today we're already the fastest growing Oracle in the market, but we're going to continue taking more of that market share and delivering novel solutions to the best teams, applications in the world, which kind of to connect to the beginning of the conversation, the end
Yeah.
users are going to feel. So that's really exciting. we'll say more about that hopefully pretty soon. On the AI side, where we are right now is we just shared over the weekend that we have over 1 million people on the wait list for it. So there seems to be some like real
Wow,
organic
exciting.
demand.
Yeah.
Yeah, yeah, it's
Wow.
real organic demand there. Um, we need to figure out, we ran some basic extrapolation on inference costs for that. If we were to release it today and the users were real, it would cost us between 500 million to $1 billion to serve
Oh
it for
gosh.
free
Right.
this year. We don't have enough capital to do that just yet. So we're going to take a more of a scaled approach and roll it out. Um, and that's already actually started. So we have like the first I think we just cracked like 100 users on the platform. We're looking at the data, we're iterating on the product, making it faster, tightening up the responses, and we're going to continue rolling it out over the next few weeks and months. Certainly, I think over the summer, we want to get it into many people's hands. So if you're interested in using the product, Chaos Labs at XYZ/AI, the waiting list is open. And feel free to shoot me or the team a DM. We're onboarding people every day.
Oh, very exciting. I've already signed up, so I'm hoping to
You're
get early
top of the
access soon.
list.
Yeah.
Top of the
Thank
list.
you.
Yeah.
Awesome. Great. Yeah, I really had a good time. Yeah, thank you for taking us through your journey and also giving us a reason and to understand why, you can deliver a better financial intelligence by building for risk. Because I do think from risk oracle jumping to finance AI is something that most people's questions are like, how does that connect? How does that transition? And why does that even matter? I really like how you're building the foundation and also focus on application before purely being thinking too much on the tokenized side. I think it's a right approach and delivering real values, and also having you being kind of the you anchored in crypto, right? Also building for a broader finance market is something that I think is even more exciting for us being in crypto. Like have that champion, right, from crypto to be able to compete with the big players like Perplexity or Gemini in the future. So yeah, we're rooting for you and excited for you. Thanks again for your time.
Yeah,
And
yeah,
thanks.
I appreciate it. Thank you, Melody, and thank you to the SCB 10X team for having us. And yeah, it was great.
Thanks, guys.
Thanks, guys.